I think we have to change the debate. Whether ESG is good or bad is a moot point. We have to invest in a way in which global economic growth and well-being of humans can be sustained for many decades from now, because that's actually when the liabilities that we look after become real. We look after the assets, and there are liabilities, people's retirement monies. That's when they need them. And so we should shift away from left, right, ESG. We should talk about what is sustainable in the true sense of the word, and what risks do we face when we invest.
Can you still state that given a climate proactive approach, that you can add to growth of free cash flow or an enhancement to revenues?
At 91, we consider all risks. And therefore, one of the risks, big risks we all face, is climate risk. Trust me, if you look at flooding that's happening around the world, if you look at insurance premia, etc., these risks are real. All we try to do is price the risk, but that includes other risks like financial risk, etc. And so then we have some dedicated funds where investors have asked us, would you make an impact? And we then invest according to their mandate. But the majority of the money we run, normal, benchmark cognizant, long money competing with everyone else on the street. But at some point, those risks, those embedded risks, are going to be priced by the market. Remember 2008, 2007, no one priced the risk of bad lending. Right now, no one is pricing the risk of excessive capital flow into private credit. Similarly, we price climate.
Your goal is to be socially useful in allocating capital. What does that mean in practice?
We live as investment managers in particular. We serve communities, ordinary people, men and women who retire, who save for their retirement. In the way we operate, we need to behave in a way which is consistent with their expectations. Mm-hmm. And therefore, we are not ideologues. We're not people who try to tell people how to live. We listen, we implement, we manage risks.
How does the message sell in Texas? We've had major firms in America, pension, responsible fiduciary money, go down to a given state like Texas, not just to pick on Texas, but how do you sell the 91 message in Texas that doesn't want to hear it?
We operate with institutional clients from right around the world, from China to California. They have different ideological views in life. They have different politics. We tell it as it is. If they want to work with us, they work with us. We're not going to change ourselves for one single mandate, but I have a very comfortable conversation with people on the political right, because we talk, and if you look at actually what's happened after the Inflation Reduction Act, it was actually the red states took advantage of it and started building for a different world. So we talk real world stuff, not ideology, and I think we've just got to get away from that.
All of a sudden, we got a guy from Belgium articulate on red and blue states. It's time for David Gura to step into the conversation.
No, I sympathize with what you're saying. I remember going to West Texas and seeing the amount of wind production that's happening there, and how much enthusiasm there is even among Republicans in Texas for that happening.
They're leading. I'm being on Texas, but Texas is leading, right?
Absolutely. Where are we in this conversation? Tom opened up by saying ESG is in retreat, so let's get away from that nomenclature. Where are we in this conversation as you look at your career trajectory and investors' openness to talking about investing in these types of products? What's the appetite like today?
15 years ago, it was a small subset. Then when everyone became aware of the climate issues and of social issues, Me Too, all these things, then it became very fashionable, and particularly in Europe. I mean, Europe, ESG is still a big thing. It's not as if it's disappeared. Asia, people are pragmatic, practical. In the US, there's the ideological divide. I just think it's a maturing phase in the discussion, and it unfortunately got mixed up with politics. That will change. But remember what we exist for as investors or as third-party investment managers. We are there to price risk, to allocate capital, to make sensible long-term investment decisions, and therefore we take account of all factors. I mean, Tom will, and you will remember, 5 years ago, no one really bothered about politics.
Are
Today,
we-
political risk is a big issue.
We have time for one more question. Are we quantifying flooding? Are we quantifying larger hurricanes, the terrible, I'm going to call it typhoon cyclone that just hit Shanghai? Are we, the new weather patterns out there, are we quantifying them appropriately?
Firstly, I have a farm in South Africa. It's very important to think about it, quantify, read. But what our industry is busy doing, and particularly, and I may say so on this channel, Bloomberg, building up data that we can then use to build models to quantify sensibly. But the insurance industry is quite far advanced in that already, and therefore there are some risks they're not willing to take on, which is a problem for society. And governments will have to step in.